In this video, I will show you my go-to entry, give you some tips along the way, and explain my simple strategy in detail. Let's get into it. Okay guys, I opened the map from my trades from backtesting from last week, or actually from this week. This was on Euro USD, and these are just some examples to show you my go-to entry, my go-to strategy, and how I see these trades. This video is purely based on the entry, so not the whole strategy. I made a video about my strategy, but this is purely based on my entries. As you can see right now, this was my trade. My entry was right here at the fair value gap. For the people that don't know a fair value gap, I'm going to tell you everything in this video. A fair value gap is a gap in the market, and it is a gap that needs to be filled with price. So how can you identify a gap? You can identify a gap where price has not been filled, not by a wick, not by a candle, by nothing. So as you can see right here, this candle is called the imbalance candle, and this leaves a gap in the market. You have a wick right here, you have a wick right here, and this candle has no wick. So this area right here is our fair value gap. So what do I like to do? I like to combine the fair value gap with a key level. So as you can see, my entry was at 1.048. That was my entry. There was a key level inside of my fair value gap. Then I put my stop loss above the swing high. A swing high is the top of the wick, and to the left of it there is a lower wick, and to the right of it there is a lower wick or candle. So as you can see right here, this is the swing high, this candle right here. It is a slightly lower wick right here. Debatable, these might be the same length, but this one is definitely lower and this one is definitely lower. And then you have the smaller wicks, these are around here. These wicks are also lower. Okay, so that's why my stop loss is. Then my take profit is based on or an order block, or a fair value gap that has not been filled from the up move in this case, or a fib extension. And then I always combine them with key levels. As you can see again right here, this was, I believe, based on a fair value gap that was not being filled prior to this move. And then I combined it with the key level 1.0440, and that was my trade. This was a 1/4 trade, if I believe. Really nice. But the trades don't really matter. I will go into replay mode in a second, but this is just to show you how I see these trades happening. The same right here. This was a 1/2 trades. This was a fair value gap in the market right here. This also counts as a fair value gap. So if you see these two candles behind each other, this is one big fair value gap. So keep in mind that this one is the most likely to be filled because it is the lowest, but this one could also be filled because it's also still a fair value gap. As you can see right here, this was also a fair value gap. This one had be filled, but the reason I did not take it is that there was no break of structure. So I always want to see a break of structure first in order to enter my trade. Then I want to see a fair value gap form in the market. That's right here. Then I place my entry. I place my stop loss above the swing high. It should have been above here. And then my take profit is at a 1/2 trade. Same around here. We have a fair value gap at this point in the market. I combined it with a round level that was 10725 and then 0 probably. I placed my stop loss underneath the swing low. This was a swing low. My take profit was at a fib level, I believe, and this was my trade. 1/2, really nice. This is the next trade. Was a fair value gap right here. This was the only fair value gap that was available for me because this one had already been taken. In this case, if this is happening where there is like a lot of movement to the downside and you missed most of it, I'm only searching for the most optimal entry that's available, and if I don't get it, I don't get it, I don't care. The most optimal entry in this case was the fair value gap right here. Stop loss above the swing high, take profit underneath the liquidity zone. This was again a 1/2. Clean trade, pretty lucky. It reversed right away after here, but sometimes you have to be a bit lucky. Then this trade, really nice trade. Again, a fair value gap right here. This fair value gap became valid when we broke structure by creating this low. We broke structure by breaking this low. So this was my entry. Stop loss above swing high. Take profit at these lows right here. And that was a really clean trade. People always ask me what my risk to reward is. I always tell them 1/2 because that is my go-to trade. My go-to trade is a 1/2, but I like to experiment with taking bigger trades now because my win rate is good. Once I see my win rate is going to suffer because of this, I will be dialing my risk to reward back a bit in order to get my win rate back up. But right now it is good, so I can up my risk to reward. And that is something that I want to teach you guys, and I want to tell you guys that If your win rate is not good, please don't go for these high risk to reward trades. Keep your risk to reward small. This way your psychology will be a lot better, believe me, if you win more. And if your psychology is a lot better, you will win more trades automatically. So it's like a win-win in that case. I know big risk to rewards are really attractive and everyone chases them, but most of the time it's not really worth it. You're in the trade super long, it does not get hit often, and sometimes you just want to be in and out of the trade as quick as possible. Actually, most of the time you want to be in and out of the trade as quick as possible. It is like an inverse correlated thing. If your risk to reward is bigger, your win rate will most of the time be lower. And if your win rate is higher, your risk to reward will be lower. So try to find a good balance in that. And in my case, I found a balance in that, and now I'm just experimenting with getting a bit bigger risk to rewards. Most of the time it will be around 2.5, 3. Sometimes I have 4, 5, 6. But most of the time I go to is 2.5 to 3. Last example I'll show you guys from the backtesting results, and this was right here. As you can see, it was a fair value gap right here. I know we didn't break structure per se with these trades, but we got a big up move from the support zone right here with a lot of volume. So this also automatically tells me that we're going bullish. Then indeed, arguably you could take this fair value gap down, but volume is going up, so I'm not trading against that. Then I took this fair value gap right here. I searched a key level in there, and that was 0725. By the way, key levels for me are like the tens and the halves. So 25, 30, 35, 40, 45, 50. So every 5 pips actually. The biggest key levels are 50, 100, 125. That are the big key levels that you need to remember. But I like to use small key levels every 5 pips in order to precise my entry. And that's what I did here. I precised my entry to 725. I placed my stop loss underneath the swing low. I put my take profit. I think this was a fib level 1, and it was a 1/2 trade, I believe. Not that big, but my go-to baseball hit trade. Okay, let's go into replay mode right now. I will show you one more example in the live markets, and then I think you get the entry, and I want you guys to try it out yourself. You might enjoy it and go backtest it and really try to learn something from these videos, guys, because I think it is really valuable. And I know I don't trade like other big YouTubers, trading YouTubers out there, but this is my own style and it works for me. So I think there is a lesson in there. So as you can see right here, we broke our highs with this move up here. So what I always look for is the support and resistance zone. This is a support zone. As you can see, price rejected it a couple of times. Then out of the support zone, we had a big bullish momentum and we had displacement. So this is also a key element in my strategy. Look at this now. I was going to tell you my entry and I turned it into my whole strategy again. But this is also a key element in my strategy, and that is getting momentum from a support or resistance zone like this. If you see this in the market, you know something happened around here. Something happened and a lot of orders came in. So this bullish momentum came into the market. Then it is your task to search for the best entry. And the best entry we search through a fair value gap. So as you can see right here, this is your best fair value gap that you have, because this is in the biggest discount. As I said, if you have a big up move without no pullback or anything, search for your best bang for your buck. Is it how they say it? Like the best value for your money. So this is the fair value gap. Is there a key level in there? No, there isn't. So if there is not a key level in your fair value gap, if your fair value gap is too small, you just place it at the beginning. You just place it at the beginning right here. Then you place your stop loss underneath the swing low. This is your swing low. And guys, don't put it at your swing low. Give it some space. Give it some space. As you can see, it is 5.4 pips. What I like to do is I give it like 1.5 pip. And so I give it one more pip space. Then I will take my Fibonacci. I place it around here. The only time I also enter is when price is in a discount. So it is below the 50%. This is also a rule in my strategy. And it is below the 30% right now. So then we take a half as a target. We search for the nearest round level. So that will be 800. And this will trade a 1/3.46, barely any drawdown, hit in 20 minutes. And that's what I mean. This is the power of my strategy, in my opinion. And right here again, if you wanted to, you could have. This is again a support zone. This is again very bullish momentum out of that support zone. You have your fair value gap right here. Do you have a key level in this case? You do, 700. You put your stop loss underneath your swing low. You put your take profit. Wait, let's see. Let's take the Fibonacci again. And I always put the Fibonacci at the swing low and at the swing high at the wick right here. Your take profit would have been here, but as you can see, it would have not been hit in this case. But if you would go for a 1/2, it would have been hit. So that's Again, showing the power of the 1/2. A 1/3 would not have been hit and you would have been stopped out if you did not trade manage. But a 1/2 would have been hit. Guys, I hope you get the hang of it a bit. I hope you understand my entry. And I think this is one of the best entries out there for like just your go-to day trading, in my opinion. And yeah, if you don't have like a strict entry already, give this a shot. Try this out. Don't skip any of the steps. Be sure you're in a discount below the 50% of your Fibonacci. Be sure there is momentum out of a support or a resistance zone. Take your trade, of course, the same way of the momentum. Make sure there's a fair value gap. If there is a key level around level 5 pips in your fair value gap, put your trade entry there. Put your stop loss underneath your swing low or above your swing high. Make sure there has been a break of structure before you enter. And then base your take profit on a liquidity zone, on your Fibonacci zones, or a 1/2, or another fixed risk reward amount. This was not only an entry video, it was also kind of a strategy video. Okay guys, I hope you enjoyed this video. If you did, don't forget to leave a like down below. Don't forget to subscribe if you're new. If you have any questions, leave it in the comments down below. And I will see you in the next one. Bye bye guys.